From Deloitte Tax and Legal Japan, welcome to the Japan Perspective. This is a podcast where we speak to specialists from across Deloitte to discuss the latest business issues impacting foreign multinational companies in Japan. I'm your host, Joanna Hazel. Today's guest is Masaaki Miura, and he is a partner in the Global Investment and Innovation Incentives team with Deloitte in Tokyo. We're continuing the 2024 tax reform series, and we're going to be discussing relevant tax incentives. We're currently seeing a global trend where countries are actively adopting industrial policies to attract investment here in Japan. So it's no exception. Can you give us an overview of Japan's recent initiative, Miura-san?
Yeah, sure. Absolutely. Japan is setting up its game with the new tax incentives set to kick off in FY 2024. Today, we are covering three main incentives. One, strategic investment. Two, innovation box. And three, carbon neutral incentives, which are the main topics in the 2024 tax reform. So the first incentive we will cover is around strategic investment. This incentive is designed to encourage corporate investment in three crucial areas. One, digital transformation. Two, green transformation, and economic security. The Japanese government considers that they are vital areas for Japan's future growth but are currently underinvested in due to their nascent stages and uncertain profit outlooks.
I see. So this sounds like it's quite a strategic move. Can you elaborate for us on the specific products targeted by these incentives?
Sure, of course. The government has identified 5 key products: semiconductors, electric vehicles, green steel, green chemicals, and sustainable aviation fuels, or SAF. These products are essential for Japan's competitive edge in the global market. But at this point of time, it is not uncertain whether its materials or semi-finished products are also within the scope or not. But the detailed guideline on this will be released in the coming months.
Okay, I see. That's interesting. So can you walk us through how exactly does this tax incentive work?
So companies looking to benefit from this incentive must first develop a business adaptation plan for manufacturing and selling what being called Industrial Competitiveness Based Enhancement Product, or ICBEP, and get government approval. Once approved, they can receive a tax credit for acquiring depreciable assets to manufacture these products. The tax credit is calculated as the lesser of the production and sales volume or the acquisition cost of these assets, incentivizing the commercialization phases.
I see. Okay. So that sounds quite innovative. I believe our listeners are probably wondering, what is the timeline for this? And is there any guidance around preparing this business adaptation plan?
Yes. So companies must prepare their business adaptation plan and get approval by the end of March 2027. The tax benefit lasts for 10 years from the approval date, but it's designed to phase out gradually after the 7th year.
Okay, so 10 years is quite a long time. And from what I understand, this is quite a departure from Japan's traditional tax policies, isn't it?
Yeah, it is. Traditionally, the Japanese tax incentive focused on supporting initial investment, but this new scheme, providing a decade-long tax credit, is a novel approach for Japan, aligning more closely with global trends such as the long-term investment support seen in the United States and production volume-based subsidies in India.
Okay, so this global perspective seems to be the key aspect of these new policies here in Japan.
That's right. Various incentives policies have been introduced around the world, and the global industrial competition has already begun. So it's believed that Japan is also creating its own policies while taking into account those of other countries so as not to fall behind.
I see. Okay, that's very interesting. Thank you. So that was us talking about Japan's strategic initiatives and how they fit into the global economic landscape. You mentioned there were 3 incentives we were wanting to talk about today. So let's switch gears now and talk about our second incentive, if you don't mind.
Yeah.
So I think our second incentive is we're talking about a new initiative that's coming out of Japan, and it's related to intangible properties, also known as innovation box or patent
Mm.
box. And I think Japan has had R&D incentives for a while now, but this is their first journey into incentives for intangible properties. Is that correct?
Yes, that's correct. Japan has been proactive with R&D tax incentives, but incentives specifically targeting intangible properties are new addition. It's a significant step considering the global trend towards recognizing the value of intellectual properties beyond just the R&D phases.
Okay, and can you tell us when this incentive is expected to be implemented?
It was announced as a part of FY 2024 tax reform, but it's scheduled for implementation after 2025. The plan is to have it last for 10 years.
Okay. And can you explain what kinds of transactions are eligible under this incentive?
Sure. So the incentive covers two main types of transactions. One is IP transfer transactions with unrelated party, which is Japanese resident or domestic corporations, and IP license transaction with both foreign and domestic unrelated parties. So importantly, transactions with related parties and embedded IP transaction where the consideration for the use of the IP is included in the product price are not eligible.
Okay, thank you for that. I'm sure our listeners are wondering, and practically speaking, to implement this, can you tell us a little bit about how the incentive might be calculated?
Okay. So the incentive allows for deduction from income equal to 30% of the lesser of the two amounts. One, the total income, or the eligible income amount derived from the eligible IP. This is calculated using what's described as the self-creation ratio, also known as the nexus ratio from OECD Action 5. It's a method designed to ensure that the benefits are proportionate to the degree of development and innovation actually conducted in the company, by the company.
Okay, so for companies that this is relevant for, what are the points that they should really keep in mind when thinking about this incentive?
Okay, so if you take advantage of these incentives, you'll need to create a document explaining how the calculations are done. While it's expected that the format and the content will be similar to the local file, which is prepared in the context of transfer pricing taxation, we'll have to wait for the further clarification in the law legislation.
Okay, so I guess we're still just waiting for some more clarity around that point. Thank you.
Yeah.
And I think a lot of our listeners here have subsidiaries here in Japan. So for Japanese subsidiaries of foreign companies, how does this play out for them?
Yeah, it's a great question, and it's a bit complex. Typically, the Japanese subsidiary may not own the IP, or if it does, licensing to third party or transferring IP within Japan might be limited. Unlike some other countries' innovation box scheme that includes related party transactions, Japan's system excludes these, making it somewhat less relevant for the discussion about IP location within groups. Nonetheless, companies should stay informed on the legislation details.
Okay, thank you for this discussion on Japan's new innovation box incentive. It certainly adds an additional layer to the global conversation on innovation and tax policy we've been talking about since the beginning of this episode.
Yes, indeed it is. I'm eager to see, how this unfolds and impacts innovation within Japan.
Great, thank you. I think now it's time to move on to the third incentive that we are going to discuss today. So let's switch gears now to talk about carbon neutrality. And I believe there have been some significant updates in the 2024 tax reform around carbon neutrality. Is that correct?
Yeah, indeed. The tax incentives for promoting investment for carbon neutrality were initially introduced in the 2021 tax reform. The recent 2024 tax reform brought about some important changes, extending the incentive for 2 more years with some revisions aimed at sharpening the focus on actual decarbonization efforts.
Okay, can you cover these major changes for us?
Sure, certainly. The first changes is now our focus on eligible investments. Previously, the certain demand creating production investment were eligible, but now only investment that directly contribute to improving a company's carbon productivity qualify. This includes installation of decarbonization machinery and solar power generation equipment, such as like that. Yeah.
Okay, so that sounds like quite a significant shift. So, what are the requirements for carbon productivity improvement?
They become more stringent. Large companies are now required to improve their carbon productivity by at least 50%, compared to the previous benchmark of 7%. So it's doubled. This is tightening of requirements is a clear signal of Japan's commitment to more aggressive carbon reduction goals.
Okay. So, what kind of assets are eligible for this tax incentive? I'm sure there's some limitations to this.
Yes, it is. So there's been a reshuffling there as well, while railroad vehicles have been added to the list of eligible assets. But lighting equipment and personal air conditioning equipment are no longer covered. This change likely reflects a refined strategy to prioritize investment within more direct impact on carbon neutrality.
Okay, so it seems quite evident that Japan is taking a comprehensive approach to support decarbonization and reach carbon neutrality. Are there any other support measures in place that our listeners should know about?
Yes, there are several subsidy schemes announced by both the Japanese government and local governments. The details of these are currently being discussed in a diet, with expectation that they'll be finalized in a month or so. It's worth noting that the companies could potentially benefit from both tax incentives and subsidies, especially those with capital investment plans in Japan aiming for carbon neutrality.
Okay, that's insightful. Thank you. So, for companies looking to navigate these changes, what would you recommend?
Companies should closely monitor the finalization of these measures and consider how they align with the investment strategies. It's an opportune time to evaluate how capital investments can not only contribute to global sustainability goals, but also take advantage of the evolving incentives landscape in Japan. The journey towards carbon neutrality is complex, but with the right strategies and utilization of available incentives, it's a goal that's increasingly within reach.
Got it. Well, thank you very much for coming on this podcast today and sharing your expertise on Japan's tax incentives. It's clear that it's a critical time for companies to align their strategies with these new measures. And just as a summary, what we covered today is incentives surrounding strategic investment, the innovation box, and carbon neutrality. So thank you, Miura-san, for joining us.
Thank you.
For those listeners that have any questions or would like to learn more, please feel free to always reach out to either myself or Miura-san on LinkedIn. Thank you all.